The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Monday edition, Monday the 23rd of December. Just a few days to go and then we wrap up 2013. I don't know, it feels like this year went really quickly. All right, so let's go to the story. Thank you, Steve, for 2 great hours and great lead-in, of course. Today being Monday, you can expect to hear Larry Pesavento straight after me. And so it's Larry, you've got programming the whole day long. You got Larry, you got Daryl Martin, you got Dave White, you got Tom O'Brien, 4 o'clock to 6 o'clock, wrapping it up. And let's go to the numbers straight away. All-time highs. It's like a broken record, this record. Dow's at 16,298, up 77. S&P is up 9.63 at 1827. Comp index is up 35 at 4140. You've got gold down 4 at 1199. Something has to go down. I guess silver is at 1948, up 2 cents. Platinum is down. High-grade copper is, let me just check that high-grade copper. HG, I think I'm going to go to the H contract. High-grade copper. Yeah, just about unch. And you've got bonds up, down 30 seconds at 129.24. And you've got the dollar down 21 cents at 80.54. And you've got the euro. Now this is going to be very interesting. Look at this. EUR, the USD, made a peak D, struggling to get back there in the daily, hasn't made D in the weekly, and it looks like it should still do that, and that'll automatically be making a leg D in the monthly chart as that long-term trend line, remember that long-term trend line? Continues to act as resistance. So above 1.38315 starts leg D in the monthly. But if it can get traction above that, that'll be the first breakout of this very symmetrical in time downtrend. I call it the inside track. It's a down channel within a channel, and that's going to be very important. Let's just go through a couple of things here. Look, the IYT, this is the transports, made an all-time high today, fractional. Well, the IYT is the iShares, Dow Jones Transportation Average Index Fund. 130.70 was the high on the 2nd of December. Important date for me, of course. So that 130.78, if it's taken out by 1 penny, which it was, 130.84, so that's 6 pennies, made a new leg. And I don't know whether this is going to be called an F/B or just a B, because the weekly just went to a D. So it was one of those cases where the technicals were strong. I had to use a parallel wave count, G/C. It resolves itself. That's the beauty of this technique. It resolves itself as you make a new high, and that in that case it became the D. And it's still D in the monthly. Now I wanted to show you a couple of things here. That's the transportation index. So far, what we've got a Dow Jones. You've got a parallel move to the upside in both the index as well, that is the Dow and the S&P, but you've got it in the transportation index. That's important. When I look at the New York Stock Exchange, and this has been the lagging indicator for a long time, it went to D today. Now, let's get a recycle. I'm calling it D for the moment. It could actually turn out to be a brand new B, but I'm calling it D because it's E in the weekly chart and it's D in the monthly chart. So that says to me, let me just do one little thing here. I want to show the IWM, which was leading, then it was failing, and now it's leading again, goes to the same thing, leg D in the daily, and an alternate wave count F/B in the weekly, and E in the monthly. So far we've got monthly charts very strong, weekly charts very strong, and we've got the daily charts, which just broke out in a couple of cases to brand new all-time highs. QQQ series, the NASDAQ Trust. We've got it at leg D in the daily. F, could be F/B in the weekly. Still very strong. Getting a little top here. The scenario that's playing out right now is fitting beautifully into a scenario that says that we should close the year at or fairly close to all-time highs. There's just one little thing that I'm going to throw in here, that I do not have any technicals that are showing at this particular point in the weekly or the monthly charts, so it'd have to be the dailies. And the dailies are all getting a little bit extended here. No, they can't. Doesn't mean to say they're going to turn around, but they are getting extended. And remember, they can stay extended for a while. But when I look at it in conjunction to the volatility index, the VIX, then I have to say, wait a minute, that was a perfect peak D in the daily. The weeklies failed again after making a cup formation. But there are moves within the moves of those cup formations that tells me that besides being the end of the year next week, a tremendous amount of information is going to be imparted to us. Why? Because as I'm looking at these various indexes, and as I'm looking at the various key stocks, let's just say I looked at my Dow Quartet. That's the Dow Quartet index that I made up. That's GE, acting very well. We are along GE. IBM, acting very nicely, considering its counter trend rally off the cup formation in the weekly chart, and the flat base restart. You know, I've not really had time to talk about this flat base restart. Maybe tomorrow. I'll do that tomorrow. I think that would be a good idea. We'll spend a little time tomorrow talking about I'll make a note of it. Tuesday, Chapman wave flat base restart. Yeah, that'll be nice. A little bit of a technical thing there, but hey, that's what this is all about, learning new techniques. You got Triple M. Look at this, Triple M. All-time highs on Friday, peak C, should still go to a new high. F/B in the weekly and a leg E up in the monthly. And look at this, UTX. Not UTC, but UTX. Try to make a new high today. Failed. You remember, that's that rectangle formation that I always talk about. Well, this rectangle formation says that UTX is going to struggle. It could make a slightly higher high, but it's kind of struggling here. It didn't struggle the last week. It actually had a very nice move from 106 to 111. But in this area, we're going to watch it closely, because if a UTX suddenly breaks out, if it goes to 112.46 was the most recent high, 12.46. If all of a sudden we're looking at UTX at 114, that's just going to say, you know what, that's a breakout. And it's a very important breakout. And it's a very important stock to break out. But I'm watching it closely, and I'm saying I think that the 112 to 113 is going to be a lot of resistance. And I would not be surprised if it goes back into a trading range. And at some point over the next couple of weeks, it actually trades back to the 108, 107 area. Now, let's look at something else. Let me introduce you back to this chart that we look at periodically. This is that monthly chart. Let me open it up here. So if you're looking at Tiger TV, you're able to see it very nicely. Give it the full width of the window there. Pull it all the way back down here. This is the chart that's important. Look at all these peak C's in the Chapman wave. Look what happened after each one of those. You went to D, pulled back sharply, started a new move. Once in a while, you went a little higher. Yeah, you went to E and an F. But the majority of time says that from C to D is a very quick move. When it's an extended move, something else is happening, and it very often just goes to a D and then a very quick E. Well, we've got a peak C going back to May of this year. And we've constantly since then gone to new recovery highs and all-time highs without making a peak. Even December has extended leg D. And all the technicals are saying, hey, you're getting kind of, the term would be overbought, but I would rather use the term extended. Because as I say, overbought, above 80%, going to the 90% area, you can remain there a long time. So this is rather extended in that it's broken a trendline resistance. It's an all-time high territory. So I'm looking at this and I'm saying, okay, all the information that I'm going to need is going to be given by weekly charts and is going to be given by daily charts. So let's look at the SPY for a moment. If I look at the SPY in leg E, I'm calling it E for now, in the SPY, in the weekly chart, E, right there, about to bump into that very strong up track resistance. And the daily chart, everything about this chart says that the move that has just unfolded right now, while it could be a continuation of the previous move, which makes this leg F, there is enough evidence to say we could continue seeing higher highs going into the end of next week or sometime next week. So I'm going to give it the benefit of the doubt by saying, while I'm calling it an F, leg F, I'm also going to call it F/A. And that's just the simplest way I can do it. I don't have any technical saying right now that it's an F. Why? Look, stochastics at 87%. That's good, and it's done it very quickly. The MACD has just crossed positively. If a MACD crosses positively, then you're looking at the potential for that green line, the fast-moving average, to continue rising. You're looking at the possibility of the beta. That is the differential between the fast-moving average and the slow-moving average expanding. I won't know that for a couple of days, but I'm saying that right now it has just crossed positive, and that is something that I've got to take into recognition. The other thing is this. In the SPY, looking at this channel line right there, and I'm going to color it green. Why? Because green will be a breakout. That'll say this week above 185.26 is trading at 182.42, up 85 cents. That's a huge breakout. And failing says that this line here, the dashed line right there, right there, it's just breaking above the dashed line now, right there. It's on the dashed line. That has been the repellent area. So I'll do it in pink. That's the repellent area. So be very clear. Talking about the SPY, a break is a 182.43 at 183.30 to 183.50. That's already outstanding action. A pullback starting at any point this week, going under 181. That's about $1.50 from here. Would say, uh-oh, be very careful. You've bumped into tremendous resistance. Dow's up 75, S&P's up 9.46. Basil Chapman, Tiger Technicians Hour. Love to take your calls at 877-927-6648. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I made a mention over the weekend. I was given this book end of last week by Larry Markopoulos. It's all about Madoff. He's the guy that from 1999, 2001, 2002, he kept on, he couldn't understand what was going on, and he was really good at math and very good at doing options. That was his thing. And he just kept figuring out more and more that something was wrong, something was wrong, something was wrong. And he pushed and he pushed at great expense to himself. And I realized the book, he's the co-author of the book, so it's going to give a little bias there. That's not really the point, because the point is that he documented everything, every single thing he documented. And it's really an impressive book. I mean, it's obviously written by a non-author type. It's just, a regular person. And it's the way he went about analyzing, the way he did all his due diligence, all the homework. And it was the way that the system absolutely wanted to. I wanted to talk about this because what we had seen in that, where the SEC absolutely ignored, not only did they ignore, but he couldn't get through until he found one particular person. And that particular person in the Boston area, this guy's from Boston, he's from Whitman, and he sent the white paper that Larry Markopoulos had put together. to the New York branch, and the New York branch, how not just pathetic, how the Boston area got them all riled up. How dare they do that? And how these arrogant people there just ignored everything. And even when the whole thing blew up, they were still ignoring it. The reason why I want to talk about that is, what if the Fed is under a certain hubris, under a certain, how can I call it? I want to be as polite as possible. Under a little misguided, there's no question that Bernanke, having gone from a Dow that could have gone into the 5 and 4 and 3,000s, has turned around something and made it that's what they said. The Fed wanted higher prices. They wanted the stock market to go up. And having pushed the market to not quite 3, but potentially towards a three bagger from the 6,500 area, are we looking at something that could potentially, and I just mentioned potentially, get out of control to the extent that if we do not see a very unorderly pullback over the next, I'm going to say over the next 3 to 6 weeks, that in fact you could start to get to that accelerated stage that takes you straight up, and all of a sudden the Dow becomes the NASDAQ 100 of the year 2000. Now, that's the one scenario. That's what I was kind of showing in that S&P chart. There's another scenario, and in this particular thing I have to step back and do my Chapman market line, my trends watch type thinking. And that's saying that under President Obama, is there any chance at all that there would be a major crash? And what I'm trying to do is to put into the perspective that he has been the media favorite, very much the favorite, and the media does not like to turn around and say we were wrong. Even with the health care, they've been very reluctant to do that. I mean, this has got nothing to do with politics right now. What I'm talking about is just pure reportage. And is there a chance that, looking out, that this is a market that can Clintonize? In other words, remember, although the market made a major top in 2000, it was never, ever reported that that was a major top that was handed to the next president. It was never reported like that. It was the next president that was responsible for the big downturn. Once again, I'm trying not to talk politics. I'm just talking about how things relate and how the baton gets handed over and when it gets handed over and who's in the lead when it happens. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 75, S&P is up 9, and we will be back with Alex in New York straight after this.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back, and I just wanted to quickly finish that thought. And the question would be, is it possible that we go 2 more years into a major top? Is this really the mega bull market that we've been talking about going into overdrive? So I'm just throwing that out. We've got plenty of time to think about the home builders have just kicked into a brand new a buy mode. Many of them are in brand new leg B or C, and the dailies and the weekly charts are doing very nicely. So we'll be talking about that, and I wanted to throw it out. I've got to think of it as a possibility because I do have a time lapse between now and April-ish as a potential major market top, but we'll see. All right, so we're going to Alex in New York. Hi, Alex. How are you?
Okay, Basil. We've been here before.
Yes.
I'm assuming that you've closed your short positions on the IBB.
Absolutely, we did. Yes, we managed to take some profit in the IBB, and we had some overall loss in the BIS. They absolutely did exactly what I wanted, moved up quicker. And one of the very interesting things is that everything I'm looking at in the iShares NASDAQ Biotech ETF is saying to me they are getting stretched, but you might have to be thinking more along the lines of, there it is, of if this is a recycle and it's now in the weekly leg C, then you have to have patience. But as I went through over the weekend, the different biotech stocks that make up the iShares, there are fewer and fewer leaders. And that's really what I look at. For instance, what's happening in the home builders now is that the majority are actually rallying very nicely. When I look at the different, I just don't have it right in front of me now. I had it, I put it somewhere, I don't have it. But if I look at let me just look at Amgen. You see, Amgen stalled. It's one of those. BIIB was doing very nicely, but it's within just a retracement. Why am I forgetting this? So we've got Amgen, BIIB. Can you, off the top of your head, name me some?
Gilead.
Ah, right. GILD. You got SCLG. Yeah, I see Gilead is testing the recent highs. It's starting to show kind of a discrepancy between the daily and the weekly in the technicals, while the price is just struggling to get above that 75 to the 70, over the 76 level. CELG. I suspect that I have been pointed correctly that the IBB is beginning to stall. It's beginning to rotate, and fewer stocks are the ones moving higher. I just see, let me see, in the Den Peak, he says, market has no memory from day to day. Absolutely. That's why I'm looking at this first. So there are certain stocks, just a couple, within the biotech area that are still very strong. But I'm suspecting that it's running out of steam and that we're going to see a pretty decent pullback. So you were going to say what?
I was going to bring it something personally to you. I assumed that you were on a statin drug when you had your cardiac event.
Yes.
And there are a number of the biotech companies that have human trials going on now with a non-statin drug that lowers the cholesterol.
I heard about that, yes.
And that's one of the reasons why I think the biotechs are great stocks. They actually make money, and they come up with new products that work.
So in looking at all the different sectors, the one sector that consistently reignites and realigns and reassesses and reestablishes itself has always been the biotech sector. When they get smacked, as back in,
if you look at October 9th,
yes.
I added in a taxable account some IBB that day. It had tremendous volume, and it made a low, and it's been going up ever since October 9th.
That October 9th low was a spectacular low, definitely. But in the process of going from a product that is in trials to being accepted and then going to sales, a lot of things can happen. And if you look at what's going on in for instance, I know someone lives just a few blocks away, and he's a real expert in the biotech stocks. And he says he's just going to hold. He loves it, and this was back in the summertime. He said he's just going to hold. I said, okay, I can understand that. It's something that it's not his job, but it's his hobby, and he understands it tremendously. And he did exactly the same as you. He's looked at them. He's looked at the new product lines, and I really cannot argue with that. I'm just looking at the chart, and I'm saying, I do know chart patterns, and we've managed to pick each one of these very sharp declines. Unfortunately, the reversal to the upside is as quick as the pain relief comes. So I would have to say that looking at the chart right now, breaking to a new all-time high, I'm not going to fight it, but I've got it on my radar, and I'm suspecting, based on the failure of the confirmations that I'm looking at between the daily and the weekly, that we're going to be real close to at least a pretty good, when I say pretty good pullback, I'm waiting for the pullback that takes it down to the lower channel line well, it's really an expanding wedge. Let's call it the inside track, and that'll be down at the 200, between 202 to 198 area. So that's only a 10% to 12% maybe correction, but for this kind of area, that's huge. So, am I expecting
That's the reason I like the ETF. I find it impossible to pick the individual stock
right,
that's going to have the great drug. So that's why I like the IBB.
And I also have to tell you something. If you're looking at it in the context of what has proven itself thus far, what has proven itself to be on every fund manager's quick button, just to press the button to go into when they need to recoup any losses, they grab this particular sector every time, and it's been tremendously successful. So I don't necessarily, at this particular point, I don't fight trends. I try not to. Sometimes you get trapped thinking that it's only a day or two, and that day or two turns out to be quite a big bump, in this case to the upside. But I'm looking at it and I'm saying, gosh, a lot of what I'm looking at says that this is an overbought sector. So maybe my best thing would be just not even to look at it, but I can't help it. It's on my radar. I've got to, this is what I do. And if anyone is long the IBB and has just been long, I would say, hey, it's the sector that's proved itself. I would say you now have the exact opposite. You've got to say to the IBB, prove that we're wrong by going down, because you've always been right. So I think in that context, having held it certainly from the October low, you've just been in a great strategic place. So I congratulate you. And in your particular instance, I'd say that's great. I think that probably, and even if you're looking at a pullback from here of about 10 or 11%, actually the last one was down 5%. So if it's down 8% or 9%, you're still going to be okay. It'll give you plenty of time to make a decision whether you want to get out. But that's just the way I'm looking at it right now. Just seems to me overbought, but we'll see.
Yeah, and if I want you say about the bull market going on, I say 2015 is when we put the high in on this bull market.
Well, that would be a year later. Okay, then the 2014 that I said is a possibility. Is that right? When would the election be? 2015, end of 2015, right? Yeah.
Well, no, 2016. It would be November 2016, and you're right. I'm using the presidential cycle.
Okay, all right. Well, we're going to be watching this real closely.
The 7th year of a two-term president.
That's what they say. Correct. That's exactly right. That's what they talk about all the time. So, all right. Well, you know what? I don't mind at all.
Okay. I just, I feel sorry every time I hear that you short the IBB, and I go,
Oh, dumb.
And I go, is it going to work this time? Because I'm long it, and I never get near my trailing stops. It just doesn't happen.
Yeah, I think your strategy is definitely the superior one, and I have to congratulate you for it.
But I still really enjoy listening to you, and I'm glad you're feeling so much better.
I am. Thank you so much. I appreciate that, Alex. Great call. Thank you. We're going to go to Warren in Denver. Hi, Warren. How are you?
Hi, Basil. Good to talk to you. I hope you're feeling better.
I am. Thank you.
I'm looking at Visa, and I've been in since 199.60, and I'm
you just pulled an Alex on me, huh? Very good.
No,
I like
not really.
That.
No, not at all. I kind of think that they're pulling the same thing as Clinton. They're kind of running biotechnology and technology up in the same kind of way they did into 2000 with Clinton.
Well, that was the alternative scenario that I had in the back of my mind for quite a while, but I'll keep it as a background, and we're going to just deal with what we've got. So, Visa, you have this position, and I'm going to suggest that at 93% in the stochastic and the MACD is still expanding, and the weekly chart is still very strong, I wouldn't even want to tell you to touch this position. I like it very much. The only thing I would say to you is, and I see A, B. Let me just double check. No, that's B right there. Give me 1 second here. yes, ABCD, ABC. On a very short-term basis, if, in fact, Visa, which is trading at 218.36, V is the symbol, up 2.39, up $1.10%, if it actually does two things. One is it suddenly pops to 221 to 222.5, that area there. I would have one little part of my position have a trailing stop, and that trailing stop would probably be at about 217.90. So it's about a 3-point stop, and just keep it as a trailing stop. That's just my thinking in terms of money management. In terms of a pullback here, if it did pull back under 215 to 214.70, I don't know if I want to even say to you to take something off, but that's where I'd watch it real closely. I'll tell you why. There are two reasons. The vertical move that it's just had says that if it pulls back sharply, a vertical move up very often can produce a vertical move down unless it has a high-level consolidation. And that would say by Monday, Tuesday, holiday Wednesday, by Thursday to Friday of this week, if Visa has not pulled back under 215, but instead is traded towards what's the high today? 218. It's traded towards 219.50, and has had about 1.5 points of wiggling down to back to the 218 level. That would be very good action. That would be a high-level consolidation, and then I would probably say to you, we could probably see Visa push into the end of the year, and then early at the beginning of 2012. I'd be very careful. I'm looking at that as the potential where we could have some kind of a pullback, and it might be a pullback of significance. I've got to see how the key stocks that I'm looking at, go into Thursday and Friday of this week. But
right now it's sort of a rumor run-up, and that's kind of what I wanted to see. Or like on the daily, I can see that chart perfectly that we're at now in leg E right now.
Yeah, leg E. I could even say E/A. I'd prefer just to say E and let it pull back and make an F/B and hold very well, and then the recycle could take it to a new C and D. I'd rather look at it that way for now, because I don't have any indications at all to say that this is an E that could have a severe, I'm not talking about just a little pullback, I'm talking about a severe pullback to 212.35, which is the 9-period moving average. Not right now. Still looks very good.
Because if you go back through the daily chart, it does these sideways moves and then does about 20.
And then breaks out, correct.
Right.
That's right.
Exactly. And so I kind of thought we were near the top. Maybe we're kind of nearing another plateau here with mine.
I would love to see a plateau, but I'm also thinking that this move from this breakout that started about 6-7 sessions ago, this breakout, if we're going to have a high-level consolidation with one more pop-up to the upside, that's where I become quite careful, and that would be about towards the end of next week or the first week of January. But right now, it's acting very well.
Well, thanks for showing me the chart, Basil. I'm watching you, and I'm wishing you to get well soon.
Thank you so much. I do appreciate that, okay. Warren. That's great, and congratulations. That's a great call. Let me just ask Lee in Dallas. Lee, you wanted to look at? Lee?
Hi.
Hi.
I'm looking at SAVE.
Okay, we'll be back after the break. Lee in Dallas wants to look at SAVE, and SAVE is the Spirit Airlines. It's in leg D in the day, in the monthly. Looks very good. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone, we're back. We're back with Lee in Dallas, Texas, and we're looking at SAFE. Spirit Airlines trading at $46.46, up 36 cents, 38 cents actually. And an alternate count in the daily E/B with kind of a U-shaped pattern, with a new all-time high in the weekly chart, leg D, and leg D in the monthly chart. So, Lee, what are you doing?
I bought it at $43, and I'm wondering, should I sell or no?
Okay. Now, this was more a trade than anything else, or it's a position you'd like to hold, but you're just wondering whether it's more opportune now to sell it, or what? What would be your thinking in terms of time?
I would like to keep that if the trend is still going up.
Okay. You see, the way that the price acted and the way the technicals acted are slightly in variance in the daily chart. The MACD's just crossed positive. It's almost like it's in a brand new buy mode, because the stochastic just turned around and went very sharply from under 20% to about 50% right now. So in a sense, I want to give the daily chart the benefit of the doubt because it's at all-time highs. And stocks that make all-time highs, just like stocks that make all-time lows, tend to want to continue doing that. So let's keep that in mind. Now, when I look at the weekly chart, it's held the 9-period moving average. It has supported 43.96. Obviously, you don't want to give a 3-point profit away, so that's something you don't really want to see. But the stochastic's at 85%. MACD's holding okay, not great, but it's okay. And the monthly chart, and it happens with almost all IPOs, if they can show some good strength and they can get through leg B, there's a real good chance that they will eventually go to C and D. And yes, Spirit Airlines in leg D for the last 3 months, it's been breaking out to new all-time highs. I like the monthly chart a lot. When it comes to the weekly chart, I have to put the weekly chart into some kind of perspective and say, the high that was made, you see, I like to look at charts like this and say, 46.40 was the high the week of the 1st of November.
Okay.
46.84, just a little bit higher, was peak C the week of the 29th of November. And now the first day of this week, it's popped to a new high, which is at 47.62, about a point. That's a point higher over a period of 1, 2, 3, 4, 5, 6, 7, 8, 9. Over 10 weeks. That's a lot of work just to get 1 point higher. And at the same time, the MACD, the MACD is holding very nicely. And as long as the MACD is holding well, that's going to say that when we're looking at a price that holds well and the technicals are holding well, then that favors the trend continuing. But this is just the first 2 hours, 2.5 hours of the first of the week. So here's what I'm going to recommend to you. It's not going to take much because you don't really want to give back much at all. What you really want is to have a consolidation here. A day like this with the Dow's up 80, S&P's up 10. Why is it only up 20 cents? Well, that's the thing that I have to try to answer. The 120-minute chart says because it's a little bit overbought, but it's got tremendous support at 45.47. Here's my recommendation. Just for now, maybe I'll be doing tomorrow. So between now and if you can call tomorrow, maybe we can look at it again. But in the meantime, what I'm looking at is if it can hold through the end of the day above 45.90, that'll be very good. If it doesn't take out today's low, that'll be very good. So I'm going to suggest if you can hold on for one more day, but make 45.70 the stop on part of your position. And I will look at it. 45.70 is a stop on part of your position. And I'll look at it again tomorrow. Because if it can rally tomorrow, that'll be very good action. Thanks for calling, Lee.
Thank you, Basil.
So, folks, stay tuned for Larry Pesavento. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.